Okay, so there's this huge new idea being floated for the American housing market, and it could literally redefine what it means to own a home for a whole generation. We're talking about the 50-year mortgage. Yeah, that's half a century of house payments. And believe me, it's a lot closer to becoming a reality than you might think.
And look, this isn't just some crazy what-if scenario. The director of the Federal Housing Finance Agency has actually confirmed it. He said, "We are indeed working on the 50-year mortgage," and he called it a complete game changer. So yeah, the government is seriously looking at stretching that standard home loan from 30 years all the way to 50.
So that brings us to the big question, right? Is this a genuine solution to the housing crisis that's making it so hard for people to buy a home? Or could it be a really long, really expensive financial trap dressed up as help? Let's dig in and find out. To really get what a 50-year mortgage would mean, we kind of have to take a step back. I mean, how did we end up with 30 years as the magic number in the first place? It wasn't just pulled out of a hat. It was actually a solution to a massive national crisis. Before the 1930s, mortgages were, well, they were brutal. They were super short-term, like 3 to 10 years, and then you had to come up with this massive balloon payment at the end. So when the Great Depression hit, the whole system just fell apart, leading to foreclosures everywhere. The government stepped in, created agencies like the FHA and Fannie Mae, and they came up with an invention that changed everything: the 30-year fixed-rate mortgage. It was literally designed to make owning a home safer and actually possible for regular families.
Okay, so if the 30-year mortgage was created to bring stability, why on earth are we talking about changing it? Well, the sales pitch for the 50-year loan is super simple and honestly pretty tempting. It lowers your monthly payment and makes that dream home seem just a little bit more affordable.
All right, let's crunch some numbers on a pretty typical $450,000 loan. With a standard 30-year mortgage, you're looking at a payment of about $2,700 a month. Now, the 50-year loan, that drops it down to around $2,620. So you're saving $79 a month. I mean, it's not nothing, and for some folks, that could be the difference. But is that the whole story? Yeah, you probably saw this coming. Behind that little monthly discount, there's a hidden price tag. And this is the part of the deal that doesn't exactly make it into the flashy headlines.
And wow, is it a big one. This is where your jaw might drop a little. For that same $450,000 house on a 30-year mortgage, you'll pay about $517,000 in total interest. But the 50-year, get this, over $1.1 million in interest. The difference is just staggering.
Let's just spell this out so it's crystal clear. To save that $79 a month, you end up paying almost $600,000 extra in interest. For the exact same house, you're paying more than double the interest for a tiny bit of monthly relief. Let that sink in.
And this isn't just about the interest payments, it's about building your actual wealth. Think about it. After 30 years, the person with the traditional loan is totally debt-free. They own their home outright. But the person with the 50-year loan, after paying for 30 straight years, they still owe almost $400,000. They've barely made a dent in what they owe.
So the big question is, does this even fix affordability? The sources we're looking at argue, well, no. It actually makes things worse. Here's how that domino effect works. You offer these lower monthly payments, which means more people can now qualify for a loan. Suddenly, you have a bigger pool of buyers all bidding on the same limited number of houses. And what does that do? It sparks bidding wars and drives home prices up even higher for everybody. It doesn't solve the problem, it just inflates the bubble.
Okay, so if the average buyer is looking at higher prices and way more debt, who's actually winning here? You got to follow the money, right? Who really stands to benefit from a market like this?
Well, according to the source material, this whole thing is basically a giant gift to the real estate industry, not the home buyer. Think about it. Banks make a ton more money in interest over 50 years. Builders get to sell more houses because more people can get a loan. Real estate get bigger commissions because the sale prices are higher. And investors? They love it because the value of their housing assets just keeps going up. The whole machine keeps churning, but it's the borrower who pays the price.
And this whole situation leads to a really powerful idea, this concept of the permanent renter. The idea is that you're not really buying a home anymore. You're not buying an asset that you'll one day own free and clear. You're just buying a monthly payment for your entire working life. The bank is essentially your permanent landlord.
One of the sources had a perfect line for this. They called it financial duct tape.
A 50-year mortgage doesn't fix the real problems, right? It doesn't build more houses or lower construction costs. It's just a flimsy, superficial patch designed to keep the game going a little longer.
So at the end of the day, it really boils down to a choice between two completely different futures, two different financial paths you could go down: ownership or what looks a lot like lifelong rent.
Just look at how these two lifetimes stack up. With a 30-year loan, buyer A pays off their home around age 55 or 60. That gives them 20-plus years of mortgage-free living to really build wealth, save for retirement, and enjoy their money. But buyer B, they're still writing that mortgage check into their 70s, maybe even their 80s. Their retirement gets totally squeezed, and their chance to build real wealth is delayed for decades. One path leads to true ownership, the other to lifelong debt.
And that really brings us to the final question, the one that cuts right to the heart of it. It's all sold as a way to make homes affordable, but what it's really asking is this: do you want to own your home, or do you want to rent from the bank for the rest of your life? It's a heck of a question to think about as this idea gets closer to becoming a reality.